Listen, I think deep down we can all agree that none of us ever actually want to be assigned our cash secured puts. We just want to walk away with that juicy premium, put our collateral out somewhere else. But listen, assignment's part of the game, right? It's part of running the wheel strategy, and management of the wheel strategy is so important. So what do we do when we're about to be assigned shares, or if we're going to be assigned shares? That's what today's video is about. And if you drop a comment down below in today's video, I'm going to give you my leveraged ETF option seller's guide. If you want that full guide, no opt-in, nothing, completely free, drop a comment down below on today's video and hit that like button and that subscribe button. And of course, I hope you are having a God blessed day. Let's talk about assignment. How do we manage assignment? What do we do when we actually get assigned shares, but the market price of the underlying assignment that we got is now way lower, so we can't even do covered calls anymore? Let's talk about it, guys. So first and foremost, okay, and I know you're not going to want to hear this, but if you're stressed out about getting your assigned on a position, you probably shouldn't have been in that position anyway. So for example, right now, let me show you guys a live covered call example that I'm in, or some cash secured puts that I'm in as well, right? You guys have seen, for example, like my Kenview right now. I have a cash secured put on Kenview right now. It's trading at just around $15 right now, but my put is at $15.50. So what was my original plan going into this? Well, I hate to say it, but oftentimes we want to look at some technicals to kind of give ourselves the best kind of shot at success. Now, technicals, of course, you know, we got to treat it with a grain of salt because nobody knows what a stock is going to do, but it does help us. So for example, when I did Kenview, you know, it was trading around this like 16 level, and I was like, you know what? I actually am going to be a little bit more aggressive on this cash secured put, because I think we have a lot of support at that like 15-ish level. Now, funny enough, obviously some really bad news came out and it dropped 13% literally a few minutes after I opened that cash secured put, dropped down to $14. I think we were trading a little under $14 at points, right? And I had just opened a $15.50 put, right? Now, here's the issue, right? When a lot of people run their technicals, like I am always long term. When I'm thinking about doing a cash secured put, I'm looking over really the course of years, right? Even my 5-year chart, I'll look at, because I just want to see where has this stock been, right? And not that the past is necessarily indicative of future results, but I look at it and I'm like, okay, Kenview has never really been at $15.50 and stayed there for long. So my original thought process was, okay, if it's never gone there before, right, and has stayed there for long periods of time, I'm okay doing it, even with all the bad press and stuff that's happening around the company. Fundamentally, the products and stuff, yes, there may be a slowdown of sales, but I do believe long term with our portfolio of brands that it's going to be okay. So when I took this trade, and if I show you guys here on the actual trade log here, I actually added a couple of new features to our trade log, guys. Obviously, second link in description, you can download all of my calculators and stuff like this if you want it. Plus, you'll get a free 2-hour training on the Ark Options Strategy. But with that said, right, when I saw this Kenview, right, this cash secured put, right, I obviously collected a 4.8% return on this thing. So the first thing we can do when we are in a position like this is, number one, don't panic. Look how much time you have left, okay? So in my situation here, when I open up Kenview, I have 25 days till my expiration. I don't need to chase. I don't need to do anything right now. What a lot of people will end up doing is they'll simply go and try to roll this position out or buy to close it out as a loss, which actually is insane. That is one of the worst things I think you can do, unless truly this company you believe is going bankrupt and you're going to just lose your entire investment. Fine, give them a couple $100 and close out the position, get your as much as your collateral back, and move on with your life. All right. So that's the first thing you need to do. Is there something still fundamentally changed that you believe this company is just going out of business and your investment is at risk? Okay. Now that's like red alert, right? That's like red alert, and you would know that. Like, what is the risk, right? Do I have a risk of losing this entire principal, my entire collateral here, if I'm assigned? Okay. If you believe so, then yes, close it out early by all means. Like if Kenview truly, like something insane came out, really, really, really even worse, like they're going out of business, they're shutting their doors, right? They're closing down a bunch of brands or whatever, then yes, I would consider maybe paying $200-300 to close this position out to protect the principal, right? I'm very like Warren Buffett and Charlie Munger, people that I consider mentors of mine, right? Just from their books that I've read, right? Like just don't lose money and never forget that rule, right? Like, so that for me is, even though I am losing money there, I'm not losing all of it, right? So that's the big one. The second thing, right, that I will do, if I can roll it out. right? I can roll it out. You guys have seen me do this more so on the covered call side, right? With the cash secured put side, I believe when you're just rolling out your cash secured put, you're kind of just delaying the inevitable, right? It's not so much like when we roll out a covered call, right? Like when I did my SoFis, right? I was rolling out my covered call in order to get assigned higher so I can capture more appreciation profit. You see, I captured a very nice, juicy appreciation profit when I eventually sold my SoFi shares, right? But in your specific situation, right? If you're kicking the can down the road on assignment, right? It might be better for you to just take that assignment, okay? Now, let's say you get assigned sometime, and this happens, right? This will happen to you. Okay. Let's say you did get, let's say Kenview, right, actually did drop, right? It actually did drop down to, let's say, $13, and I ended up getting assigned at 15, and it's continuing to be a bloodbath, right? This is a very common question you guys ask me. Look, what do I do in that situation? I bought my Kenview here at $15.50 per share, right? And it's, right now it's trading at like $13, right? Like I can't even do my covered call on this P. I can't even do the covered calls on it. Well, there's realistically, you have quite literally two options. You can outright just go and sell your shares for the $13.30 or the $13 that it's trading at, get $1,300 back, factor in, like, let's say in my situation, plus I got 74. So technically my cost base is a little bit better. I only lost, let's say, $130 about on that trade, right? Factoring in my premium. Okay. Learning lesson, move on with math. Nothing wrong with that. Second thing we obviously want to check is, can we do the covered calls on this thing, right? Can we at least get some covered calls out far enough, right, on it? If not, then why, then we have to think, right? Like, where do we want this position for us to go, right? Do we want this to be, a stock that we believe in that is going to recover over a period of time, or is it not, right? For me, I'll usually even push out that expiration date if I have to, right? Like if I just go out, let's just take a look at Kenview. There's a lot of outages across the board. So guys, right now, with the AWS stuff happening, sorry, I'm spelling this wrong. So everything has been so slow. I don't know about you guys, but it has been a rough morning here across the board. So, but like, for example, if I was going to do my covered calls here, I would see how far out I can get. I would quite literally be going out 2-3 months if I have to. I'm a firm believer that I'd rather have my shares working for me, even if they're only getting me 2% every 2 months or 3% every 2 months or whatever it is. Like, I'd rather do that and lock that money up and lock up that collateral for a little bit of premium than trying to wait, right? Because if I just wait, like, it's just not necessarily going to happen, right? So for example, like coming back to the chart on Kenview, if I was assigned and I'm like assigned down here at like 13, right? I'm going to be trying to sell right at the money where I was assigned, 15.50s. Maybe I'll even toss in the 15s, right? If I do the 15s, yes, I'm still actually making money on that trade because factored in with my $75 of premium that I collected. I may do the 15s on a monthly basis or every 2 months or even every 3 months, right? So there's always an opportunity to push out that expiration date further for you. Those are usually the two that I do though, right? Number one, if I truly believe I need to get out of this stock, I just want my money back and as much money as I can get back, I'm literally just going to sell the shares, factor in my premium and call it a day, right? Especially if I just lost belief, right? The second thing is just pushing out that expiration date. I know it's not ideal, but what I found about it is like, it's still like, if you go out further on your expiration date, you might get like 3-4% on your collateral, and that's still about 1% a month on your collateral, which in my opinion is still a really, really good play, right? So I still will factor that in, whether, and again, it's all about just keeping the money moving, keeping the money working for you, right? And you guys have seen, I've done a couple trades here that I had to push things out a little bit further, right? Like, for example, the Kraft Heinz I'm in, right? Right now, I got assigned Kraft Heinz, guys, at 27, right? My put right here, you could see my Kraft Heinz, I was assigned at 27. Kraft Heinz is only trading at, what are we trading at right now on Kraft Heinz? Let's see. Let me scroll down here. We're trading at 25.73. Okay, so we're actually seeing a little bit of a jump this morning, just about 1%, which is nice. I need that, but it's trading below my cost rate, but it doesn't matter. I still went out there, you could see, and I immediately started doing covered calls right at 27 immediately. I didn't wait for, it to be at the top Bollinger Band and just, doing that. Like, I didn't even do that. I immediately start doing the covered calls when I get assigned my cash secured puts. I'm not waiting. I immediately put that collateral, that asset immediately to work, right? If I can, right? I always try to be at or above my cost basis. So in this specific situation, I just did 27. I have no real appreciation profit here. If I sell my shares for 27, I have no appreciation profit. I just was simply premium chasing here, right? But if we continue to recover, which I believe, Kraft Heinz, I don't know, it's in a little sketchy spot right now, in my opinion. I really just want to get out of it before the split. I don't know what that's necessarily going to do to the stock, but until then, I'm just going to keep doing 27 calls. And look, I went out pretty far on this one. I went out over 30 days. If I need to the next time around, the 31st, in 2 weeks, I'll literally, I quite literally will just, push it out 2-3 months just to get that money working. And eventually, if I do end up selling it at that point, fantastic. I still didn't lose money. And that's the number one rule that I want to follow. If you guys want my full trading log, you want my cover call calculators, cash secured put calculators, all this good stuff, click the second link in the description of today's video, guys. You're going to get a 2-hour training on our Ark Options Strategy, which takes the wheel strategy way to a different level. And especially if you don't want to be trading full time, I surely don't. You're going to get this trade log and all these goodies at the very end. And click that second link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.